In this session, we don't have any PPTs or presentations or anything else. Just we are going to discuss the basics of option chain analysis. We are going to learn how the reversal points can be identified. Guys, is it a time to start the session? A minute or so, we are going to start it. Bear with us for a momentum. Okay, guys, let's kickstart the session. Introduction to option chain analysis and the data. How the option chain analysis and open interest would help us interpret the basics of option chains. So here are some of the parameters in the nseindia.com. This is a Nifty option chain. If you search the Nifty, I'm going to show it step by steps. Nifty in derivatives. Okay. So it will give us the derivatives, which of the contracts, most active calls, most active puts, most active contracts by open interest. So this is how it gives us the brief idea. So one needs to understand the basics of it. If you are an options trader, it is very much important, my dear friends, to get the groove of it. So basically what happens here in the call section and the put section, two sections are there. Call is what on a buying side, whenever you bet on as an option buyer, if you are analyzing the market to be bullish, you are buying the calls. Put is something when you are betting on the direction of the downward or a bear market, you are buying the puts. So what happens here in the call section, let us see. A strike price is there. First of all, we are going to understand this. Everything is derived products. Options are the derived products of the underlying security, that is the spot market. What is the spot market price now? 25,683.30 is the closing price as per the Friday. Okay, what are the options here? On your left hand side you are seeing the call options, on your right hand side you are seeing the put options. Right, guys? Say yes in the chat box. If you are seeing it, clearly say yes in the chat box. It's a complete practical basic analysis session for the open interest and OI analysis. We are not going to do anything extraordinary here, but this will help us in a very effective way for the results. This is the Tuesday's expiry data, how the markets can trend. First here on the call side is ask quantity, how much quantity one is asking. Bid quantity is the bid price and the ask price of the option. Bid price is a buyer, ask price, sorry, ask price is the buyer, bid price, sorry, ask price is the seller, bid price is the buyer. So that is the difference what you are seeing. Let's see into it. Currently we are seeing the 25,700 call option in the site. What is the ask quantity? 2015 lots have been asked. What is the bid quantity? Sellers are 2015, buyers are 780. What is the current price? 119.60 and 120. Bid is the buyer who has placed at the price 119.60. Ask is the 120. Change in price. This is minus 125 rupees 70 paisa is the change in price. This is the last traded price 119.60. IV is the rate of change. The speed at which it changes is 10.61. Volume, number of contracts traded based on this. What is the total open interest? 94,323. Lots. Change in open interest is 94,323 is the open interest. Change in open interest is basically 85,087. So there is a lot of change in open interest that has happened. This is how it is. I will explain it in a simple way. Change in open interest is the change what has happened today. Open interest is the current number of lots outstanding in the strike price. This is what we call it as current market price. Underlying price is 25,683 for the Nifty. What is the strike price? Nearest is 25,700. That is in the money call option. In the money call option, sorry, out of the money, 25,683 is the current price. 25,700 is almost out of the money or at the money. In the money call option is 25,650. If you are seeing this as a put option, 25,700 put option is currently trading around 73 rupees last traded price. This is the volume. Huge volumes in the put side is seen clearly. See, in the call side, we are seeing a volume of 36 lakhs 89,184. In the put side, the volume is 92 lakhs. Some exit of the position also has happened. That is change in OI. See what has happened. Put open interest is 80 lakhs 80.97 lakhs. Put open interest is. IV is 8.97. There was a writing or selling was witnessed. So the short cover, as there is a negative change in open interest is there. Change in open interest is very much important. So short covering has happened, and also long build up is seen here. 25,650 long build up is seen. 25,600 long build up is seen. So shorts have been built at 25,800. The major short build up in the call option. So 25,800 call option is trading around 71. Nearest 25,900, 25,800 and 25,700. From sequentially call short build up is seen. See, there has been a short build up even somewhat in 25,650 also. So aggressive shorts have been built up to 25,900. So 25,800 becomes a very big hurdle for the Monday's trading session. How to analyze that? Because the short build up on the call side has been done. 25,750 in the money, long build up is there. Short was built at 25,700. Short covering has happened. Even if it starts falling, more short covering will happen, and short cover has happened in different strikes, 25 800, 25 850, 900. Long build up is seen from 25 750 in the money call option. Long build up is seen. So basically, it is a volume based change in open interest volume. What is the open interest? These are the important parameters which needs to be covered in the option chain. See, continuous shorts have been built. 25 400, some base is increased on the change in open interest, 25 400 and 500, which can act as a some support. Well, that is also a short build up is there clearly. See, 25 500, the major build up is there in the open interest. Even also on the change in open interest. Similarly, on the call side, we can see that is 25 800, 25 900. The major shorts have been built. So one thing is clear for the markets will not cross 25 800 to 900 in a hurry. Even 25 700 also shorts is built. The call option of 25 700 also short has been built. Open interest is positive basically. A ultimate factor here is it's a volume based analysis on the option chain data. One is open interest, number of contracts outstanding. That's what we call it as open interest. Change in open interest is today how much it has changed. Volume is the total volume, number of contracts traded. IV is the volatility factor. I'm going to show it to you what is IV. See what is implied volatility in options. It is the rate at which security rises or falls, the speed at which volatility is high when the security moves up swiftly. When the Nifty moves up or moves down swiftly, IV is high. Volatility is low when the security moves up slowly. Historical volatility is the recorded volatility, how the underlying really moves over a set period of time. Like 1 year historic volatility is 10, and now it is trading around 15. So the IV is high. Currently, market is volatile. 1 year historical volatility is 10, and if currently we are trading at 8, I'm setting you an examples. IV will give you the speed at which the option can move. That will make us more profits. It's about the base, where the base is building and where it is shifting. Option chain analysis and open interest will help us. Any doubts, my dear friends, till now what we have discussed? Then I am going to take one or two questions step by step, because understanding this data is very much important while if you are trading options. The next higher level of price weighted, now it is a volume weighted PCR, put call ratio is calculated, and all the aspects have been done. See, basically volatility or IV is speed or the rate at which the prices change. That will guide us the direction. Volume is the total number of contracts traded. total volume of whatever has happened, that gives us the picture of it. So any questions, please feel free to put up in the chat box. Then I'll continue further for the explanation. I hope all of you are clear till now what we have discussed. Great, great, Mr. Balchandran. Just we have to simplify our analysis what it is. Open interest gives you the clear picture of what is the currently open or outstanding positions. That is the volume. Then a change in open interest is something which gives us the change of contracts, what has happened. Ask quantity and bid quantity. Bid is how many buyers are there, ask quantity is how many sellers are there. Bid price and the ask price. Buying price, buyer puts a price, ask price is the sellers what they are selling. Strike price is the strike price of the instrument. Underlying value is the spot price. Volume. So these are the parameters on the call side and put side one has to discover. How to do that in a simplistic way? Here we are seeing in a very concise way. See, currently open interest change percentage is there. Let's see the put side. See, here we are seeing last traded price, how much the price has increased in the put, how much the last traded price call option has decreased. Like 25,700 call option has decreased by 51.24%. 25,700 call option put option has increased by 164.97%. So what is the open interest here? 80.97 lakh contracts. And what is the change in open interest? 1.35 lakh shorts have been covered at 25,700. So some those who are writers they have covered because it has closed below that. Some short covering is there, and clearly here we are seeing the build up at 25,800 and 25,700 and 25,900 where the call rating has happened. Even at 26,000 the huge call rating is there. 25,700 only the call rating has been happened. That is the positive OI change. See how we'll see it. Short build-up in the call side has been done. Short build-up is slowly increasing on the calls, but up to 61.3 lakhs. Change in open interest is 921%. So, oh, there is a huge, like around 18 to 20% short build-up has been done. As per the volume data, OI data, if you calculate the percentage, short build-up has been done. So So long build-up is seen in 25,650, 25,600, 25,550, 25,500. Healthy increase of change in open interest also has been done. So there is a continuous long build-up in the options. On the put side, it is open. On the put side, it is open. So what is the ultimate goal here? What we have understood here is as simple as that: 25,200, 25,400, and 500 becomes a some base. Markets can crack on the downside as there is a put long build up. Short covering has been done in the put side. So now again what is happening here? Short build up in the call options has happened aggressively from 25,800 and 900, even 26,000. 25,700 also decent build up is there. So what it hints? How do you need to understand if it is a short build up? If you are opening a brokering terminal, change in open interest is positive on the call side or put side. So what is happening? Short build up is happening. If change in open interest becomes negative, then the shorts were covered. So this is the basic option chain analysis. See, I will tell you what is in the money, what is at the money, what is out of the money, my dear friends. I'll tell you in a very simple way. The underlying price of the option spot of the any instrument, index or a stock or an option, that is called as underlying or spot price. Currently, what is the spot price of the Nifty? Can anyone say 25,683, right? In the money, if we are considering 25,6 call option, let us discuss about the call option. 25,650 and below, whatever it is there, those are in the money. 25,600, 25,500, those are in the money options. If market is trading at 25,700, that we call it as at the money. 25,750, 25,800, 25,850, 25,900, and etc. etc. becomes out of the money for the call option side. For the put option side, currently we are trading at 25,680. So 25,700, 25,700 becomes the at the money. 25,750 put becomes in the money. 25,800 put becomes in the money. 25,850 becomes in the money. 25,650 and below becomes out of the money. Hope you are clear with the structure of the option chain. Am I clear, my dear friends, with the structure of the option chain? Any doubts on the option chain? See, basically, it gives us a range of the market. Wherever the short build-up is there in the put side, and wherever the short build-up is there in the call side, that gives us the range. The maximum change in open interest and the maximum open interest where it is built, there that becomes a resistance zone. Basically here what it is giving in the idea, see 25,700 and 800, the nearest strikes where there is more open interest built. Any rise that will be any rise, there will be a selling in the markets. Shorts have been covered at 25,800 also. Long build up is there in the 25,750 put. So markets are at present on a short side. Every 5 minutes, 15 minutes also live data, you can see it in your brokering account if you have a web-based terminal. Every 15 minutes or every 1 hour, where there is short covering, where there is build up, understand the range of the markets to trade the markets. Once near that levels, then you have to apply the other technical analysis and parameters. This is one objective. Like let us just say there is a short build up in the 25,500 put. and the 25,800 call, there is a short put up. Then what is the range for the markets? 25,500 to 25,800. That could be the range. But here what has happened? 25,700, 800, 900, and 26,000. All there is a call writing. So 25,800 is very tough to cross by based on the other technical analysis and price action behaviors. Then you have to take the action. It is a sell on rise market as of now. We are very clear on it. As per the data, also that is giving us a one hint. It's kind of a one opportunity. So on the downside, it is open continuously. Short build up is seen even on the. See, there is a continuous short covering, but some more open interest is built at 25,400 in the change in open interest 25,400 and then 25,200 and 20. See, 25,400 to 200 some base is built that can act as a some part of a support, but till it is quite far away. Even 25,500, there is no substantial change in open interest base is built, so markets could go ahead on the short side. This is one kind of a hint. And the more data in your broker terminal is giving you the clear idea. See, put side there is a clear long build up in 25,600, 25,500, 25,400. There is a some base 25,500 good base is there. 1.17 crore the long build up is there. Above below that 25,400 and 25,200. Short covering has been done in the 25,700, 800 in the puts, 25,900. So it's very tough to hold the markets for the next week until on the rises. It's a sell on rise market. Are you guys understanding how to analyze the option chain data? This is a calculation for the open interest. How to calculate? It is purely calculated based on the volumes for the open interest. Open interest calculation and PCR calculation, put call ratio calculation is done via volume or the number of contracts outstanding or the change in open interest data. But volume if combined with price gives us the great results. There is a advanced revamped calculation which we are going to teach you in the Option Hydra workshop, which is a mentorship program. Exclusive mentorship program starts from Feb 7th, where you are going to learn from nuts and bolts of option trading, particularly exclusive for buying option traders. There would be a 7 days whole month mentorship with live trading room of 1 hour every day. So from psychology to how to trade options, the margin requirements, hedging, buying options, particularly anything related to buying option, in and out of it, and the advanced strategies we are going to discuss from price action and how you identify the option pricing model using indicators, price methods, how to select the stocks for option trading, which strike price to select. With the strategy building and psychology building, we are going to do this option hydra workshop. See, any demat account you can use, sir. Okay, Mr. Ethan is asking how to identify the long is built or the short is built. It's very simple. If there is a change in open interest is negative, the build-up will give us the clear idea. If there was a strong build-up and the open interest also is positive, then change in open interest is positive and there is a strong build-up, the numbers of change in open interest has increased, then there is a positive buying options. As it is 25,750 here we are seeing buying is built. 25,700, 73% is the change in open interest and 54.5 lakh contracts long build-up is seen. Similarly, here the short build-up is seen with a change in open interest in the money calls. So here we are seeing the short covers in the money puts. Short covering has been seen where there is a negative open interest. The positive change in open interest and negative change in open interest gives an idea of what is happening in the open interest and the option chain. See, I am using Fires, I am using TradeGenie, I am using NSE India. Anywhere you can get the option chain, you can use it. But live market data with your broker is the better one. NSE is little bit delayed, like 5 to 15 minutes. That is not at all an issue. One can watch out in that constraint. So that is how one can build the option chain data in a proper systematic way. So any doubts regarding the same with the option chain analysis, how the short buildup can be identified, how the long buildup can be identified, I have explained it, what all the parameters are there. This is the introduction to option chain analysis which will help us identify the range. If you want to calculate the price weighted behavior of open interest and all, you would join the workshop where exclusive advanced strategies would be taught. This is just a glimpse of it. In the option hydra, you are going to learn lot of volatility based PCR and option chain OI. Everything is revamped with the price weighted calculations. There is advanced methods which will give us exclusively the proprietary model desks which we are going to teach there. This is just a glimpse of it of the option hydra. Option hydra buying options exclusive mentorship program for 1 month. You are going to learn with 30 plus hours of learning, totally 365 days of content, structured everyday live trading session from a SEBI registered research analyst myself for 1 month with the weekend sessions continuously. Private community has access to discuss with the mentor. So it's an exclusive real time learn, earn, and prosper kind of a concept where you are going to do the framework with the clear journals, risk calculators, proper structured option, successful buying option trader you would like to become. This is the course which is meant for you. How many of you are interested? There is an exclusive offer for the first 20. The offer is excluding GST 12,500 with 1 month of live trading room, 5 weeks of training, 5 days in fact on the weekends, total 30 plus hours, 1 month of live trading sessions. So this is the workshop which you are going to learn uh, one in a piece in India, where the exclusive real-time trading strategies. I have been a research analyst with the SEBI from for 13 years. I am a SEBI registered research analyst. I work as a consultant with mid-sized brokers in the research desk, derivatives desk, which I handle and provide the quality calls and research on the buying options. Some of you are our traders also. Here they know how our calls and research is. So that is how we deal into the things, as simple as that. So if you'd like to learn more about the options trading, obviously this is the platform which will master you options trading, particularly buying option strategies. So, any questions on the option chain analysis before getting into the Nifty analysis and next week's how the markets would perform? If you would like to join the Optionator workshop, feel free to contact with the webinars team. Optionator.com, the contact details are given. Get a call back is there. The support number also is there. You can get more details and get in touch with us for more details. Now you can ask any doubts on the option chain analysis before getting into the weekly analysis of the next week. What could be the trend, weekly analysis, and the forthcoming weeks, next couple of months, where the markets can be. I'm going to give you the glimpse of it. So I'm going to teach you one small Elliott wave pattern also. Oh, any doubts? Please feel free to ask before getting into the part of the session. Lot of exciting stocks also where the shorts can be built up and where the Nifty is headed. Prepare yourself for the next week with us in the weekly analysis session, which we are going to discuss now. We are going to start it. Any more questions on the option chain analysis? If you have any doubts, please feel free to put up in the chat box. 5 minutes is your time before we start the weekly analysis. I will take up the questions for 5 minutes. Any questions on the option chain analysis? Else, shall we go to the weekly analysis? If we can go to the weekly analysis, say yes in the chat box, my dear friends. Oh, great. Most of you are expecting how to plan your next week, where the markets are headed. So let's get into the Nifty analysis. Then any doubts, I'll come back again. So what is happening with the Nifty? I am going to start with the broader structure, larger degree structure. First of all, basically Nifty has started falling, tariff issue or whatever it is. This is the structure. The lows of 25,700 and 690 has been broken. It has closed below that. The market structure looks to be weak. If we break this average 25,640 levels, the more selling would come towards 25,353 or 25,442. At least these levels can be tested. Even more lower levels can come in. How I would say, as in a simple way, let us say, let us draw a trend line. Let's do the different types of analysis before getting into the Elliott wave analysis. Here, after a period, we have broken a trend line. Okay, my dear friends, until the previous day's high is taken 25,940, we are not out of the woods. Okay, close is 25,683, open is 25,840. That is why I'm saying 25,800. Even the option data hints that is the major resistance. So 25,840 to 880 becomes a major hurdle unless until it crosses. We are not out of the woods. Market any bonds would be sold. Nothing has changed. The broader structure is still weak. Any small pullback also. This 25,940 unless until it crosses even 850 840 levels is crosses. It is see as the option data what it is saying 25,700 and 800 call selling has been done. So market structure is weak. So this is what the structure of the market is hinting. What is the larger degree picture? I am going to show you a structure of markets, what it can happen in the Elliott wave perspective. See, this could be the probability for the markets. This is what I am seeing in these markets. How much would be the retracement that I'm going to show you. This is the ABC, what is happening. And here, what is happening, I'll show you again. We call it as 335 flat correction. This is what is happening with the markets. A small false fresh high has been done here. Now what has started in the markets? This could be devastating. This could be devastating. Everybody is expecting fresh high. I am expecting this. This is called as a irregular flat or a flat correction. What is happening in the markets? See, this is the expectation for the Nifty. What can happen here? By April or sometime. This is what I am expecting. Now we are in this phase, wave 1, 2, then the 3 would fall in the budget, then the consolidation by the March end or April end, we can end the correction with the lows broken. This low could be broken. That can be my minimum objective is 21 to 77. So this is the main price objective for the Nifty to act upon. Even 20,500 to 800 or 21,758 can be retested in the Nifty. The flat correction is what is happening in the markets. Even the 50% retracement could be possible. 20,800. This is the bold call what I am taking. This is the bold call before the fresh high happens in the markets. This could be the probability for the Nifty to happen, where the Elliott wave structure is hinting. What was the high previously? 26,277. What is the high here? 26,373. 26,373 is the high. 100 points we have missed the high. The pattern seems to be like this. In the overall structure, this is a flat correction, what we call it as. Even it's a flat or irregular, even if it can end here 23,600 or somewhere in between also, it can end flat, can end until this 5 wave decline is completed. We are not out of the woods until this 5 wave decline is completed. We are not out of the woods in this market. This 5 wave decline has to complete before the next leg of rise can come. Well, that can be one probable scenario, but there are the alternate wave counts. Unless we cross this 26,200 again, 26,200 to 26,300 crosses, then the wave count should change. As per the value Elliott wave counts, this is my structure as of now. If it is 1 2, then if it is 1 2, it should not break this low of 24,700. Even let us keep this count also awake. This leg should not break this zone of 24,800. So now it would, the important support of 25,700 and 25,840 is broken as per the price data. 25,720 and 840 becomes an important resistance. It's a sell on rise market. Elliott wave counts is the larger degree structure. Even if we hit this low of somewhere around 25,440, then a bounce back, and then again we test 25,350 levels, there can be a 5 wave decline. That is the internal structure what we are seeing. Still we are not out of the woods. Rises on Monday would be a selling opportunity. I believe 25,770 to 820 would not be crossed. That is my viewpoint as the chart hint. The structure looks weak for the market until the previous day's high is crossed or closes about 25,940. The shorter term structure also is weak. Any rise the target for the Nifty unless we cross this threshold. We are heading towards 25,300 levels, minimum 25,300 in this fall for next week or so. After that, even if we consolidate, 26,000, 26,060 may not be crossed. Then the near the budget time, we can see that consolidation fall towards our result season and budget. The next leg of fall would be decided. This is a overlapping pattern, so I would not consider it as an impulse. So this is the Nifty analysis for me clearly for the next week. What about the bank Nifty? Well, let us see that also charts. See, basically, Bank Nifty also looks on a dicier note. 1, 2, 3, 4, 5 is complete. This can be a flat. The rise can be, even if it is a five wave, once we break this trend line, we are done and dusted. The lows of 59 200 and 58 600 are very important. Any rise even towards 59 600 to 59 800 would be a selling opportunity for Bank Nifty, for 58 600 as a targets for short term. That is how we view the Bank Nifty as of now, even if it is the strongest and sideways market. Similarly, the Fin Nifty structure also, it's making a head and shoulder more bearish kind of head and shoulder, but this is a very important inflection point. 27 200 breaks. Next, 26 800 and much lower levels in the Fin Nifty can be seen. Well, ending diagonal, one scenario is there, 27 200 volts. The last leg of rise may come, but here 1, 2, 3, 4, 5 ending diagonal may have completed already in that scenario. See, this is 1, 2, 3, 4, 5 may have completed in the ending diagonal front. If that breaks, then the Nifty is in a havoc for 25 500. Mid-cap Nifty avoid as it is in a breakout. They are saying inverted head and shoulder, but we have to watch out this structure. 13,400 is very important. If we fail that breakout, then the fall could be towards the 12,500. We are seeing the different indexes. Sensex is similar to the Nifty. The trend line simple analysis also we have done. PSU banks may have completed the fifth, or else fourth may have completed. One more leg down towards 8,000. Then the fifth may come and the final rise. That is immaterial. Metal index, also some reversal is seen, but we need to watch out how it pans. Farm also looks like a 335 consolidation may happen unless the rise comes. FMCG is the most weakest of the index. Auto index, see, like there is a structure in the auto index. See, at least the third might have completed, or some one more small leg might be there in the third. It is questionable third wave in a larger degree. Auto index may have completed the third. So that is the structure what we are seeing in the auto index as well. Media is already out of the IT is the bearish one. 5 wave decline by a consolidation. If the IT breaks this 36,500, the trend line also is there. Then we will see the sell off in the IT towards these zones for the next leg of rise. 26,000 can be tested in the IT. You believe it or not, another 5 wave decline is due. Why it is due? This 50% retracement can be done. This is the, see what has happened here. This is the super cycle degree wave 1, 2, 1, 2, 3, 4, 5 is complete. Now larger degree fourth is there in the IT, so I would not be a great buyer in the IT. Small cap might be in the range bound consolidation, so it is nowhere assured or something. In the small cap we might make a double bottom. It's in a channel unless we take out any bullish stand. Even on a corrective note, 14500 can be tested. Infra also 335 structure, large bearish candle, at least 80% of it retraced, then only we are going to see that. Similar way, mid-cap Nifty. This is the clear picture of irregular flat in the mid-cap Nifty. This ends at 50,000, or this ends at 43 is the question now. 335. This mid-cap is a clear structure which gives an idea. Real estate, well, consolidation and outperformance or anything, even if it is 5 is complete, some retracement might happen, then the next larger degree leg might start. See, PSU index also looks on a very parabolic rise. Can see the parabolic fall or consolidation even in the X wave, so that avoid stocks. As of now, there can be a scenario of markets doing the rounds. If this is the bearish bell told candle, what we have seen, unless this candle is crossed by 80%, I am not going to buy a buyer 26,060. So it's as simple as that. This is the weekly candle, let us say. At least 26,060 to 80 has to cross. 26,200 is the best option. 26,080 crosses, I would see the opportunity to act upon. 25,800 to 900 short covering can come, but that is clearly not on the shorts. So that is the analysis for the weekly analysis with different perspective. Everybody is bullish on the markets, but I am clearly bearish on the market structure. I reserve the right to be wrong. I'll also like to add the disclaimer: stock market investments are subject to market risk. Please read the related documents carefully before trading or investing. Do consult your financial advisor. I am Raju Angadi Vishwanath, a SEBI Registered Research Analyst. Registration with SEBI does not guarantee you any returns or profits. Also, this analysis is for the edge where we can create the positions rises is sell in the market. Topic rises, again sell ICICI Bank. Rather than that, you will get great opportunities for selling. Ultratech is one of them, and also I like Apollo Hospitals on the short side. So this is what I believe the structure of the market is. And that's it for today. Any questions? I am open up for the questions. We can do the Q&A. Yes, definitely, Mr. Hiten. I can show the Bank Nifty charts for you. See, basically, Bank Nifty structure is consolidating, and we have a support near 58,600. Rises around 59,484, 59,600, and 59,800 are the resistance. 59,500 to 800, we have major resistances for Bank Nifty as of now. Any rise on next week, 59,800 until it crossed, I would not be a buyer. If that becomes a consolidation pattern, any consolidation rise, then a weakness, I would be a seller for 58,600 at least for 58,600 to 700 as the targets. On rises, I would sell the Bank Nifty. It's a trend line, simple trend line what I had drawn. The support zone is 58,600 to 700. So this is how charts are panning out for the Bank Nifty. Fin Nifty is more weak. The head and shoulder pattern is confirming. Any more questions? Please feel free to ask. I am bearish on Apollo Hospitals. As per my view, trading options is on your own discretionary risk. Unless this candle is 7,400 or 450 is crossed, it's a bear grip stock. Any rises towards 7,300 or 7,000 330, it's a selling opportunity. Even we might rise to 290 and then we see the shorts build up. That's what I feel as per the charts. Let's see. Rather than that, I would get into some banks or Ultratech Cement. So I hope I have answered all your queries. Any more questions, my dear friends? This is on the weekly analysis outlook and the front. Hope all of you enjoyed the weekly analysis. So Elliott wave structure is out of the context. It's a very long structure. See, I might be seeing a two-wave adjustment. There are multiple parameters which can be done. Even if it is one, two, three is completed, four might consolidate for the bank nifty if you are considering. Similarly, one, two, three is completed. The four might take this structure. Even 54,000 or 48,000 could be the base, or even 50,000 consolidation would happen. Then again, next leg of rise would come in the bank nifty, which can lead to the 75,000 odd mark. So, as of now, correction is imminent. That is what we are doing. Consolidation may happen for some period of time. See, first, this is the important support 58,600. The next support is 57,500 as per the price action. So hope the questions have been answered and the wave counts have been defined with the analysis, weekly analysis. That's it for today. Any questions I'm going to take up? Please feel free to ask for any questions, my dear friends. You can write up in the chat box for the questions. So, in the meanwhile, anybody who wants to learn the exclusive option trading mentorship program for just 12,500, option Hydra is there. 30 plus hours of learning, 5 days in the weekends from Feb 7th. We are going to start. You can contact the webinars team. I would conduct from nuts and bolts of option trading to advanced option strategies. You are going to learn like around 15 to 20 strategies. Is with 1 month of live trading session for 1 hour in a day. Whatever you learned in the workshop, you can go through the content in the optionhydra.com. If you'd like to get into the advisory desk, obviously you can contact us with our team. Yes, definitely you'll get the recording, sir. You can contact the webinars team, optionhydra.com. There you can just visit and you'll get the webinars contact number. You'll get the recording in the webinars.com website where you'll be having, where you are registered, you'll be having the recording. So hope that's it for today. I hope there are no more questions, my dear friends. There are no more questions. So Telegram channel name is Trader Sat. I'm a founder of Trader Sat. You can visit us for advisory desk or premium research or calls. You can get in touch with us. That is for paid calls also. We do provide with the SEBI Registered Research Desk. That is Trader Sat. For the workshop, we are collaborated with the Option Hydra. We are doing it. I would be the mentor, Mr. Raju Angadi Vishwanath, as a registered research analyst. This is the content where I'll share with the chat box here so that you can go through the content and you can get in touch with us. I shared it. The content you can subscribe 1 month of exclusive options buying program. We are doing it. You can contact the webinars team, particularly Allied and one in India for buying options only. Many will teach selling options, but here we are doing it on buying options because the mastery of mine also is there in the buying options where I provide the real time research. So, guys, there are no more questions. That's it for today. Thank you, everyone. Keep learning, keep sharing. See you all back again next week with the live trading room. You can visit us on the website also. Oh, For the research and advisory, you can get in touch with us. That's okay, that's fine. You can visit us for research and advisory. For the workshop, we are doing it with exclusively with Option Hydra. This is a complete comprehensive mentorship program. Any questions or queries, you can also contact Febinar's team. We are going to get in touch with you. Thank you everyone. Have a happy and prosperous next week ahead. This is the insights. Many of them are bullish, but markets are showing something else. Something is cooking in these markets. Be cautious with your investments. This year, I'm expecting Nifty to be one low, then one high. The expectation for Nifty is one low first, then the high is next. This after this, I'm expecting Nifty to travel to the fresh highs. Let us hope. Let us see how it pans out in the fifth wave also. That's it. Thank you everyone.